Day 2342. Let's get it. Okay, so this week's a bit more active. Like, I didn't do last week, the forecast last week, because all we had was this and this news, of which they're not very big impact. And then this dude was talking, so it's gonna usually result in a choppy market. Or a one directional market. I don't know, man. Okay. So what do we have? We have Monday, JPY bank holiday. Tuesday, Thursday, we've got some pretty big news, and Friday also. Friday also happens to, Jesus Christ, that ball drag. Yeah. Excuse me. So Friday we have Euro news, Euro holidays. Likely to see a slowdown in the volatility on that day. So yeah, should be a good week up ahead with directional movements. Then to the charts. JP225 seems pretty unchanged. Actually, no, I lie. Let me talk about it a little bit. So what happened is we've hit that all-time high. I don't know why I labeled it as monthly. But I said liquidity, that should be all-time high. This is August. Okay, let's full screen that. This is the month of August. This is the month of July. So you can see July got very close to the all-time high, but didn't reach it. And then August, this last week, which was the first week of trading, saw some sell side, and then saw a decline, and then price push higher towards into buy side liquidity. So as you can see, momentum is still very bullish on this pair. Let's go to the weekly chart, and also do like my voice box keeps. How do I explain this, bro? It's low-key hard to talk because every time my voice box feels like it's like being squeezed or something. Maybe I should just slow down and breathe a little. 832.6. Okay, that's fine. So zoom in to the weekly. On the weekly. So we have this level of weekly buy side that price closed above. Don't consider it no more. These seem mitigated, but that's because I'm reusing fair value gaps from a while back. Yeah. So there we go, all-time high. This could be considered as a confirmed order block. Although it's not my favorite type of order blocks to use. Because retracement into here plus engulfing that more or less is considered an order block. Let's move this all the way here. Again, I'll just be form fitting. This is the type of things I want to see. Have a new all-time high. So I guess this could kind of shift forward. I mean, it's pretty much the previous week's high, so do I really need to have it like on here? Not really, but it helps apparently. And I would say more, but like talking this much itself is pretty hard at this moment in time. Okay, daily chart. All-time high, traded through there. That's probably a lower time frame buy side. Should not be visible on this interval. Okay, so this is no longer all-time high. So, geez, that bull drag, Jesus. I honestly thought I was done with this like a few years ago, but I guess there's still some growing to do. It's monthly buy side. Oops. And we have this fair value gap, which was inverted. We have this order block, which I want to say was traded into, and apparently I'm supposed to consider this entire structure as the order block, but I feel like this would do just fine because this is how far the engulfing candle went, but then it also engulfed this one. You know what, I'm just going to stick to this last candle. Okay. So we have this new fair value gap here. Have this level, which is break of structure. Why am I using this particular level? Because it is, what's the opposite of precede? Succeeded. Yeah, that's the word. Succeeded by a sweep of liquidity and then break of structure, fair value gap, order block. See that there? That's a sweep of liquidity because it came back and closed right above it the next candle. For confirmation, the following candles after it did not close below that sell side liquidity level. Okay. And that made what? Break of structure over here, which means could expect to see price retrace lower into here in the upcoming week before pushing higher. If I had to, I would, it's a pretty big stop loss. How big was this one? 130. Can I do it again? Probably not. Probably not. But since this is what I do now, I am seeing something of this sort. In the upcoming week, and this is gonna go uploaded to Twitter. Let's get to pair number 2. Okay, wait, before I get to pair number 2, make sure I have this in a draft. As in draft my tweet before I forget that I'm supposed to send these things. You know what? I realized I'm gonna start distracting myself on Twitter. So let me just get this done first, and then I'll go post all the stuff. It's probably what I should have done from the start. Anyway, pair number 2 is gold. Okay, so that's the last 2 weeks of price action on gold. Not too bad. It's just the timings of, and maybe my predictions are a little bit exaggerated, but direction seems to be okay. So here, I'll start on this time frame, and then I will refine it once I go to the higher time frames, and then come back down to here. So this is meant to be here. Did we have a break of structure? No. I don't see no swing high. Maybe on the lower time frame, but on this time frame, just the daily chart, there hasn't really been a shift of structure to bullish side. So what does that tell me? That means to me, I'm seeing that this is just a retracement for price to continue going lower. Why? Because there is no displacement to any particular side. This, while it is displacement, it's coming off the back of running sell side and trading into the daily PDRA and weekly PDRA overlap. If you can see this little green line over here, this is a weekly PDRA. So yeah, let's go up to the higher time frame first. Okay, so still consolidating what we have been for the last 2 months, 3 months, 4 months if you will. We're still within the range of this candle. More or less only chilling on the upside, but still within the range of this candle. Weekly chart, this is now invalid because we closed above it, but kind of wasn't giving me very clean like direction that we're going a little higher or lower, but now at least kind of see that. Ooh, high, higher high, lower high. Could that be an indication for lower prices? We'll see in the future. Another low created, but still within the range of this low. Higher low, bit low, higher low, higher low. Could continue going higher. 1, 2, 3 highs, could continue going lower. It's beautiful that this is a consolidation range and it's producing something like 400 pips. This is like 1,000. This is changing $10 roughly. Changing roughly $100, so it's like in a $200 range. Far cry from what we had earlier, but still plenty. Still so much plenty. The thing is, over here there's no there's no bearish PDRA, which means that I just have to think that it's gonna be bullish since there is no bearish PDRAs on a higher time frame. That is, there's no monthly or weekly. What do I see happening this week? Yeah, so just ignore all those things that say mitigated. I think these were made before I updated my... No, okay. Let's update this now. There we go. This can go. This two can go. Maybe a little off. Don't really want to see us break too far beyond that. Something like this. I'm gonna call for the clipboard. There we go. Might have to do the same thing for JP. And lastly, your USD. Okay, this is progress. So this can go because price is closed above it, and then it's consolidating at that area basically. Also, it's just below here for the magic of Fibonacci numbers. Otherwise, nothing really much else, just the previous month's high. I think we've taken the low of the previous month, 3997, 3912. Yeah, we've taken the previous month's low. See us maybe retracing into here. Okay, that's a little bit more interesting now. Okay, so they all have that. How to switch off text? There's a button I remember you could press and make the text disappear, but just gonna have to do with that for now. Okay. If anything, I feel like it's just coiling itself to push higher. One, we've respected this level. Yeah, that we had a run into there, but it was probably NFB. As you can see, immediately came right back up, closing just below the midpoint of here. And this previous week had a dip lower and then closed just above the midpoint. Reasons for me to believe that next week is gonna be bullish. Alright, this isn't the time frame for that yet. Yeah, I mean it's also consolidating roughly in a bit of a consolidation from there to there. Came back to the midpoint roughly and then rejected. Guess it's gonna continue going higher. See that the first discount array held perfectly and it's an imbalance, which is in the hierarchy of PD arrays. Not that high. Okay, could probably just delete this then. This time frame. Absolutely annihilated here. Okay, so what happened? Several levels of liquidity taken out. Okay. Closed above the midpoint, formed a swing high within this fair value gap. We did have a break of structure here, going through this high. With displacement. Oh, we'd probably want to mark that. Extend it out into time. Dale. Technically, this should be done here. Why is this still here? Okay, so we didn't tap into that. We did. What's the high over here? 898, 882. So we then sweep that high. No complications here. Okay. Now wait for the week to open so you can set limit orders and then get about your business for the rest of the week. So those of you with 9 to 5s or like school or whatever it is, you're not a full-time trader, you can't be at the charts all day. Monday morning, I do analysis on Sunday night. Monday morning, set your limit orders, you're done for the week. That's it. You just have to wait till Friday or Saturday where you look at what's going on with your trades, like they hit take profit, stop loss, or whatever it is. Review your trades, and then you're back at it next week. You don't have to sit and stare at charts all day for you to be profitable. That's just something I've learned from my experience. Whether you want to implement it or not is completely